because it combines AMA with Mukesh Bhai. 5 decades of this memorable journey in the wonderland of budgets by 16 finance ministers has offered him the great fortune to travel to over 50 cities in India and abroad and address over 500 small and large gatherings. I also welcome Dr. Savan Godiawala, visiting professor at IIM Ahmedabad and IIT Gandhinagar, former partner at Deloitte, and the past president at AMA, who will present the economic survey analysis. I would now like to facilitate both our distinguished speakers with a rose. With this, I invite Mukesh Bhai to take over the podium for his talk on chills and thrills at the Finance Bill 2026. Over to you, Mukesh Bhai.
Thank you. Thank you, Rajiv Bhai, for your very kind words. And of course, my association with AMA is as long as these 46 years. And in fact, had it not been for budgets, probably I don't recall any tax consultant having become, apart from, of course, my friend who joined later, Savan, plunge in as a president of a management association. But my close connections with AMA gave me the opportunity of not just then restricting it to my relationship with budgets, but then with friends like so many of them who I see here, particularly in my team when I took over as president, my dear friend Yatindra Bhai Sharma and friends like Divyesh Radia and others. We all work together and of course have very sweet memories. You reminded me of Dr. Bimal Patel, who walked in just a while ago, 30 years ago, because the AMA, this building, is going to be 30 years very soon. Before I begin, I want to acknowledge very graciously the presence of a dear friend. And I feel very honored and privileged to have here amongst us today. Friends, I would request you to give a big round of applause for Sri Harin Bhai Pathak. Friends, out of these 50 years of budget, he has been associated in the parliament, seven from 1989 to 2014, 7 terms and 25 years without a break. Without a break. And I've had the privilege of interacting with him for all the 25 years. When we used to very closely, interact. And if I had some concern, at least in those days, I had a HMV, as we call his master's voice, who would, on my behalf and on behalf of the taxpayers, raise a voice. I would want to, Harin Bhai, can I request you This is too small a thing, but it means a lot to us. The AMA Scroll of Honor, I think you deserve it truly for having represented Ahmedabad. Thank you, Harinbhai. Thank you especially for making it a great pleasure. And now,
You can bring now. They want to present. They will give to you.
Oh.
Before we start, right?
come on. I am very touched by this very warm and affectionate gesture.
50th budget analysis.
May I request you once more? That's a no, I know he has to. You come all the way from Abu, and so kind of. In fact, the rainbow colors on the shawl, it's almost like a rainbow, reminds me to start with this small little observation that this incidentally happened to be, if we exclude the interim budget, because she was not supposed to be doing anything in that, but after a full rainbow of 7 years, this was Nirmala ji's 8th budget. And after the rainbow of the 7 budgets, where I think some lovely gifts by way of bonanza had been offered to direct taxpayers. And I am making a reference to this because I am to talk on the finance bill. I will leave the domain of the economic aspects of the budget, except for saying that I want to make it very clear, while I am going to be, Savanbhai, quite critical about the chills and thrills of the finance bill, as far as the budget as a whole is concerned, with its vision of Viksit Bharat and Atmanirbhar Bharat, I have commented all along that for Viksit Bharat, this is certainly, as was mentioned by her and the Honorable Prime Minister also, this is a reform express, no doubt. But my grievance and complaint, and this is what I have been voicing for the past 49 years, and whenever required, I have also saluted the finance minister or ministers And at the same time, I've taken the liberty to call spade a spade. I think that has always given me the rightful credibility. So, with due respect, I'm going to be critical because if the budget was from the economic point of view, a reform express from the direct tax angle or on the direct tax front, it is nothing but less than a local shuttle train. Why? Because the local shuttle doesn't have that speed and velocity. It, we were expecting, this was a great year in the sense it was a year of confluence, confluence, where the 1961 Act was to be bidden goodbye, 31st March 26, and from 1st April 26, we were to have the new, in fact, she has already announced that we are going to have the new Income Tax Act of 2025. We had the 1922 Act, which lasted almost for 40 years. 1961 Act, which of course, let me tell you, this Income Tax Act is such a, like you can compare it with a naughty, tiny toddler, very difficult to hold and keep steady. The toddler always wants to jump out of your hands or do this or that mischief. So our concern always was, in fact, I have, and Harinbhai is a witness to that, in this very forum, this exercise started from the 2009 Direct Tax Code. You recall, it was Mr. Chidambaram who had said at that time, I want to do something. And he tried to initiate it, but we raised our voice against so many grave concerns that we had. And as time passed by, Pranav Babu then realized that it will not work. And we in fact came up with a slogan, dump the direct tax code. And I remember in this very hall, we had at that time the chairman of the select committee and the former finance minister, Shri Ashwin Sinha, who was very much here. And we had presented to him. And finally, based on the recommendations, they, Pranab, when he was the finance minister, he said, I want to give up this exercise. The next phase started, and we brought about several meaningful tax reforms. Justice Ishwar Committee, based on the direct tax code. And I think the greatest event that ever happened, about which, I have acknowledged even in my video clips, is when the Honorable Prime Minister had that, faith and trust and courage to set up this PPP, public-private partnership, that we did in terms of presenting a series of proposals for simplification and rationalization. And one of the star proposals, friends, if you recall, was the faceless assessment, which has come to stay. I remember on 13th of August, 2020, it's now almost more than 5 years that it has anchored its roots. A lot of things have taken place. But then the speed with which they wanted to rush through this Income Tax Act of 2025. And with all due respect, I want to say why I am having my grave reservations about whether the 2025 Act will at all serve its purpose is, I think those of my professional friends who know about it can be, if I have to explain this, I would just be able to best illustrate with this small little example to the my Ahmedabadi audience. And I said, Gujarati ni baat karo chu, Majani, small little thing. Take a joint family, and it is comprising of say 12 members. What are the names of them? They are all living in a house. Petha bhai, Amtha bhai, Kachra bhai, Joita bhai, Mani ben, Shakri ben, Kapila ben, Devika ben, Somo, Nagji, Kanji, Kanu, almost a dozen of them. Same house, 12 members. And one fine morning, somebody says, you will continue to live in this house, but we will change all the names. Petha Bhai will become Kachra Bhai, and Joita Bhai will become Amtha Bhai, and Mani Ben and Chakri Ben, all names, like this. You are changing all the names. Otherwise, the same house, the same members. And then, પછી જુઓ મજા. સાહેબ, ઘરની અંદર એક નવી વહુ આવે કે જેનું પિયરમાં કંઈક જુદું નામ હોય, had a different name, and સાસરામાં there is a different name. તો સાસુ સસરાને એના હસબન્ડને પણ તકલીફ પડી જાય આ નામ યાદ, જૂનું નવું યાદ રાખતા, ઓલ્ડ એન્ડ ન્યૂ. હવે અહીંયા તો you had a full income tax act with so many sections, and you have all, what you have done is, let me be very honest, and I have no reservations. I'll take the challenge if I have to prove it that I am wrong. They bodily lifted the Income Tax Act 1961, put it in the AI machine. What were the, you give commands. Commands were, we want 1 to serial numbers, no ABCD, no ATCD, EF, no. Okay. We don't want any provisos. We don't want any explanations. We don't want notwithstanding. 1, 2, 3, 4, 5, 6 commands were given, and it was all put. Several groups were formed in the North Block, everybody having separate chapters and this and that, and then that was all rolled into one. But what was it finally? It was nothing else but merely new wine in the old bottle. And this is what has happened. So last night, in fact, last night is not the correct word. Until early this morning, until the wee hours of the dawn, the FM completed her job 11 to 1. And then it was all talking to the media alone. But my team and me, we were all sitting together, burning over the midnight oil. Why? The biggest challenge was old and new ne correlate karwano. And see, they said we are going to bring in simplification. Now, what is the simplification I want to tell you? Friends, the new law is going to be effective from 1st of April. 500 plus sections. Now, already in the finance bill of 2026, which runs into 222 pages, for the first time, we have 23 amendments which pertain to the old law, 1961. and 87 amendments which pertain to the new Income Tax Act, which has yet not even been born. So what has happened, two sections have been completely omitted. Abortion થઈ ગયું, બે ના તો. Why? Because, this is so dynamic. I don't blame you, but it is impossible for you to really handle this. And what happened? Because of this, two sections omitted, 9 sections substituted altogether, and 87 sections amended. So just imagine, almost 20% of your new law, which is nothing but the old wine in the new bottle, is virtually rolled over, were made in one single year. I don't recall, and this is what I had said from this forum last year, if you recall, that in the history of Indian taxation, if in one single year any finance minister has given the highest amount of tax reliefs, it was that budget of 25. Because they wanted finally that we should make the new regime attractive. So give graded rates, 4 lakhs, and then at every slab, you have the very marginal equitas, fair, reasonable, everything okay. And up to 24 lakhs, you don't even touch the maximum rate. Zero tax on 12 lakhs. Of course, I'll come to that zero tax on 12 lakhs a little later, because that again has been an optical illusion. But what I'm trying to say, friends, is after 2025, and we still don't have official figures because 2025, the returns are going to be filed this year, and you will get to know. But I am told from informal sources in the North Block that after the new regime was made so attractive, after so many phases, practically it is expected that this year the number of tax returns with the old regime is going to be maybe less than 5%. Because only a fool, if you have to, we worked out, if you have to pay almost similar tax at a similar rate of income, you need deductions of 8-10 lakhs. From where are you going to get them under your Section 80 family? So we were expecting they would be phased out. But to my surprise, in the 2025 Act, almost over 30 sections relating to these deductions and exemptions, they have been literally bodily lifted and kept here. So I asked somebody in Delhi, I said, why? Because not only this, there are instances, and let me point out, Harinbhai, you were an MP in 1993, right? At that time, a provision came to be introduced for a minor child. If you had a minor child, income of the minor would be clubbed with the income of the parent, whosoever's income is larger. Now, at that time, obviously you have to keep some threshold exemption. In 1993, that means almost 33 years ago, they had kept 1,500 rupees. It was a respectable amount of exemption. Can you believe it? Okay, they never had time to look at this in the 61 Act, but they were framing the new Act, and you take a look at it. Even today in 2025-26, the same limit of 1500 rupees is continued. And I said, why? Why? So they said, we were only supposed to, AI machine was supposed to only change the language, not the figures. My God. So you tried to simplify the language. I'm just using simplify the language or the layout, but you never tried to rationalize the law. There are so many illogical provisions which still continue. And as I said, if you thought, because what was being advocated, the new law will be simple, stable, not to be disturbed, will. Baba, अभी तो जन्म भी नहीं हुआ, and you have made almost 100, tamperings to it in the very first year. What will happen later? And we expected that if you were to phase out, because when I'm talking of rates, what has happened is in the new act, you have two slots of rates. One is new regime of the old act and other is old regime of the old. So ye naya, purana, this, that, it's going to be so tough. Why do you want to continue the old regime at all when not even 5% of your taxpayers are going to avail of it? Why do you want the clutter here? Because every year in your finance bill, you will need to keep these two sets of rates. And as I said, this old and new, just changing numbers, confusion galore. You don't even realize that you mean. In fact, this time in the finance bill, there are half a dozen provisions where they have said they are like errata in the sense that we had missed this out and missed that out, so we are correcting it now. So if this is the pace at which things are going, how do you expect taxpayers to live with this new tax? Savan bhai, chartered accountant of 24-25, he passed his examination. You taught him the 1961 Act. He's wanting to start his practice. He has this 2025 Act. Provisions are the same, but numbers all ulta pulta. It's making your life so difficult. And today, let me tell you, if you do not have an AI tool which gives you a comparison of the old sections with reference to the new in terms of numbers, you cannot even read or comprehend the finance bill. And what have you achieved? I knew Harin Bhai was going to come and he likes shairis, he's known as Chote Vajpayee in the parliament. और वाजपेयी जी है तो शायरी तो होनी चाहिए. And I try to live up to that. तो मैंने आज सोचा और एक शेर निकल गया, पुराने को नाम दे दिया नया. सुनिए, पुराने को नाम दे दिया नया, पर नए में सचमुच नया क्या आया. पर नए में सचमुच नया क्या आया, जब नए में ही पुराना था चिपकाना. जब नए में ही पुराना था चिपकाना, तो फिर पुराने में दोष क्या पाया. I still maintain, friends, it is time. Yes, we want simple, rational, logical, equitable provisions. But for God's sake, don't make the life of taxpayers and tax professionals so miserable. How many tax professionals or those who are practicing tax as accountants or as professionals or who have learnt law as students, can you raise your hands? Oh, so many of you. So be prepared to pasti. All your library for all these years will soon become pasti. And who will play masti with you now? The new AI created law. AI. Friends, again, why I said this is a local shuttle? I was expecting, chalo, last year you gave a lot of relief, no problem. But this year, something, you know, you have a reputation that you always are generous. More so being a first lady prime minister, you are large hearted, you know. So we felt that at least some relief, if not to all, to the salary taxpayer. Standard deduction कुछ बढ़ाएंगे. At least inflation का जो rate, nobody can claim कि there was no inflation last year. Inflation को तो आप cover करेंगे. But what has happened, you know, they have for the first time, you look at this and it amuses you, there is a term, ease of living. Ease of living. Now, generally, what do you understand by ease of living? कि भाई आपकी lifestyle जो है वो अच्छी रहेगी, आसान होगा, सब. So you are expecting some relief. But under ease of living, they have put 7 provisions and maybe except one. The question is whether the remaining 6 are at all going to facilitate ease of living. At the most, they could be ease of compliance. But there is a difference. There is a difference between a concession or relief in monetary terms and, you know, some procedure being simplified for you. So what is it that they have brought? The only monetary relief I could find is very clear. You must have heard because it was there in the speech. Motor Accidents Claim Tribunal compensation, the interest you get on that will be exempt. So somebody came and told me, સાહેબ આ તો બહુ અઘરું છે. આનો લાભ લેવો હોય તો મારે મોટર ચલાવવી પડે, ક્યાંક ઠોકવી પડે, એમાં એક્સિડન્ટ કરવો પડે, કેસ કરવો પડે, એમાં મને અવોર્ડ કોમ્પન્સેશન થાય ને પછી ઇન્ટરેસ્ટ થાય તો કંઈક હાથમાં આવે. What to say? This is your ease of living. Then, okay, it's welcome for the employer because there was a disallowance if there was some mistake and delay of paying the employee's contribution. We don't want the employer to play mischief, but there could be genuine bona fide lapses. So the employer is told now if you deposit the difference by the due date of filing the return, we will not disallow. Now, you call this as ease of living, and for whom? Employee or employer? Then, friends, you have TDS and TCS provisions. You know, I'm not going into all those because I know Savanbhai is also looking at me. Savanbhai, don't worry. But these provisions, TDS and TCS, no doubt we welcome. Okay, if you are going abroad, earlier you were paying 5, now you pay 2. That's good. But it is not tax in absolute terms. It was only collected and you got set off. And you got refund also if it was extra. Now refunds come like this. So what is ease of living there? Maybe yes, ease of compliance. Then friends, they say return of income. Return of income, you know, that 9 months and 12 months provision. Now there also, you know, they have made in this budget 2 parallel chains. You know, I'll come to that because it's a little important. But under the old act and under the new act. So you have to study and understand this. And then, friends, you have your updated. So, return filing, if there is some simplicity, we welcome it, but that could have been done under any law. What is so great about ease of living here? That apart, friends, what has happened is under another head. And why, I am having this grievance ke FM ne kuch nahi diya, chalo. For the first time, I have been listening to budgets all these years. When there is a concluding part of the budget, I have a parliamentarian. What does the FM say? The revenue impact of my proposals is so much of revenue foregone, so much of revenue gathered. In part B, Harin Bhai, I could not believe it. I did not hear it in the speech, but I thought maybe to save time, she just skipped that part. But it is not there. For the first time, even economists are kept in suspense as to what is actually. Frankly speaking, there was no question of any revenue outgo because there was no relief. MACT માં તો ક્યાં આવવાનું છે અત્યારે કઈ બહુ. So that is why was it that the bureaucrats did not draft that at all? Whatever it be. But this was a departure. And my complaint is your tax revenues were growing in such a healthy way. What prevented you? Friends, let me share these figures with you. For 25-26, that is the current year, the revised estimates, I am talking only personal income tax, not corporate tax, okay? Personal income tax figures were 13 lakhs and 12,000 crores. Very healthy amount, okay? In fact, just 5 years ago, this was around 419,000. So it has multiplied in 3 times in 5 years, in spite of all concessions and other things having been given in the past few years. This year, in the 26-27 budget estimates, against 13 lakhs and 12,000 crores, you see the figure 14 lakhs 66,000. So what is the additional collection? 1 lakh and 54,000 crores, which is how much percentage of 13 lakh and 12,000? You'll immediately say 12%. A finance minister is getting a 12% healthy growth from income taxpayers like you and me, who are honestly paying our taxes. And we are being shown a why? Tango. At least something, and that's my grievance. Why have we been left out? And that too by these googlies, that you are trying to classify procedural changes as monetary reliefs. Friends, I also want to bring to your notice that there is a great talk about, rationalization. They say we have brought in so much of rationalization. And what they have really tried to highlight is we have rationalized and simplified the law relating to penalties and prosecution. And they have used this term which you saw and heard all along yesterday, decriminalization. Now let me read what is this rationalization that has come. Friends, the rationalization that they say is, kindly bear with me, they say that it is proposed to amend all these sections. Now, I am not reading because these new sections of the new act will not make any sense to you. But the penalties and prosecution 271 to 276 and all these sections, right? So they say in the light of continued exercise of decriminalization and to make the punishment for the offenses mentioned proportionate to the crimes, the principles that are followed in the proposed decriminalization exercise are, and what is the rationalization? First, the nature of punishment is changed from rigorous imprisonment to simple imprisonment wherever prescribed. જેલમાં તો નાખવાના, પણ earlier it was 7 years, now it will be 2 years. You call this rationalization? And why do you want, if somebody has really done something wrong, let him face it. Now, what is so great about it? And then rationalization of penalties. I think what has hardly appeared in the media or what has been talked about. In fact, she made a reference to it, but when you actually read the provisions, आप खड़े हो जाओगे. What you are being told is, and you know, the justification they are trying to give, that is even something which, you know, literally disturbs. Because what they say is in these provisions of rationalization here, what they are saying is as far as penalty is concerned. Now they say we want to change these principles for levy of penalty, granting immunity from penalty. And my friends know, granting immunity, you have two kinds of penalty. One is penalty for under-reporting, which is just a technical fault, 50%. And there is a penalty for misreporting, where there are specific instances that this is misreporting. But then the language in the section is, if the under-reporting is as a consequence of misreporting. Now, this literal language of the 1961 Act has been bodily lifted and put in here also. And we know what officers do. Tell me nobody passes an under-reporting 50%. Everybody goes for 200%. Against the provisions of law. So what happens? Now, again, if you want to get immunity, the condition is, first of all, you have to pay additional tax in case of misreporting, 30% tax, and 100% of that, another 30. So you have to be prepared to pay 60. They have brought it at par with that search provision. Search my disclosure karo. Here, if you are accepting it, we will recover 60%. But the condition is, you will not go in appeal. You will have to pay the tax. Now what happens? Jodku janmyu che. And they cannot be separated with each other. That means you have no option but to accept, you know, that terror which is inflicted on you. If at all you want a little bit of a certainty, ke bhai, I want immunity. Though you may be in a 50% compartment where there is no additional tax also here. So, you know, to be very honest, I want to tell Sawan, I am going tomorrow to Surat and day after to Rajkot, yesterday, tomorrow morning in Baroda. In fact, I have gatherings where there are tax professionals and I'll be addressing them and they patiently listen to me for 2.5 hours. Sometimes we've had meetings, Harin Bhai, like a Dhurandhar movie, you know, 3.5 hours, because if that was when Chidambaramji brought those FBT provisions and all that. So I'm not going to take too much of time. I would like to wrap up very shortly, but with these sensitivities, at least friends, sharing with you that let's first of all try to if we can do something before 1st April, let's not make it such an issue that we cannot. Let's be pragmatic. We want to live with this, and these notorious provisions, they just cannot stay. If I have to deal with each and every provision, it's going to be very challenging. I'll very quickly run through a couple of them which are important. And what you have read in the media, what you have popularly heard, I don't want to repeat. You all know you will get, if you are in business, not in audit, you will get 1 month extra. Instead of July, it will be August. They have brought in some provisions are welcome also. They say revised return. Revised return, today it is up to December. We'll give you 3 months extra. But then these bureaucrats, ek baar lohi chakhiyo, and they always want a little pound of flesh. So there is a fee attached to it. And what they've done is practically, the problem with penalties could be challenged. And if you could show that there was a reasonable cause or valid cause, they could be knocked off. So for last so many years, what they do is they bring in fees. So in this case, say for example, if you have not filed your return in time, you file it late, you have to pay one fee first, up to 5,000 rupees. And if you then want to revise it between December and March, you have to pay another fee. Now, there also this drafting is such, they could have said that in the second case, we will levy so much of this if it is like this. But then I am reminded of Newton. Newton શું કરતો હતો? મોટી બિલાડીનું મોટું કાણું, નાની બિલાડીનું નાનું કાણું. So like that, you have provisions in this act, friends. And we call this as the act of our 21st century. There are a few other provisions which I need to sensitize you on, apart from what you would be knowing and what you will have time to catch up. But a few things, in fact, every time I received a few questions and from friends in different places, and one of the things, or two of the questions, one was about sovereign gold bond. You might have read about it. Sovereign gold bond, in fact, I myself in my tax guru series, based on the language, it was a loophole, but I had opined that, okay, here in the sovereign gold bonds, at the time of redemption, you get the exemption if you are an individual. The current language is any transfer by way of redemption. So there was no condition that you should have been the original subscriber. So, people doing smart planning, what they would do is, before redemption, 2 years, 3 years, they would buy from the market, get the redemption, and enjoy the exemption. Well, that was on the base of the law as it prevailed. They have amended the law, fortunately, with effect from 1st April. So I am duty bound to share with you that as an intelligent and upright Ahmedabadi who should live up to his reputation or her reputation, you are free to enjoy the benefit of this provision until 31st of March. That's what the FM says, between now and 31st March. So these are just small loopholes, but keep them in mind. In case you have purchased, if you sell after 1st April, it will be taxed. You can do this. Friends, buyback of shares. We always remember our history, Delhi to Daulatabad and Daulatabad to Delhi. You are back again from dividend and dividend to capital gains. Now somebody was saying, "Are dividend saru hatu." મેં કીધું કેમ? તો કે પેલા 12 લાખ રૂપિયાના અમારા exemptionમાં આવતું હતું ને, so I have income less than 12 lakhs, I was getting the benefit, so I didn't have to pay tax. But now if you treat it as capital gains, friends, I have spoken so much on this, I have written so much on this. I am still not able to take it. Why? This optical illusion. I'll just give one example. And Harinbhai, this is one point. If you can, as a parliamentarian, I tell you, you will get blessings of not just hundreds of thousands, but millions of taxpayers. Because who today in the market does not have at least some small capital gain, long term or short term? You have it, right? And there are so many cases where incomes are less than 12 lakhs. See the irony of it. There is a senior citizen who has income of 6 lakhs. 6 lakh hai. 4 lakhs is his pension and 2 lakhs is short term capital gains. IPO माने बता मैंने भरा से पैसा तो. So the total tax computation, though it is below 12 lakhs, the rebate will not be allowed under 87A without any limitation. The computation would be on 4 lakhs, your tax will be zero because that's the basic exemption. On 2 lakhs, what is the tax you have to pay? Only 40,000. 87A says you can get rebate of up to 60,000 if your income is less than 12 lakhs. You are just at half the limit, but you will not get the benefit. Why? Because last year the bureaucrats said we will not allow rebate on capital gains. So it's a curse for you. This time a sin tax came on what? What is that sin tax? You used to smoke, then you had to pay tax on cigarettes. In the markets, what is known as the sin tax now? F&O. Where it is still a mystery. I've been trying to find out for the last 2 days how much of revenue they are going to get. Because from 50% to 250% is the hike in F&O. And the North Block says, we have brought in this tax. Why? Because we don't want people to do risky things. Now, if you are doing something in the market, you are doing it with your own understanding. My friends from the market, they say, of course, yesterday, market ne khana kharabi was attributable to that. Of course, that is not everything. The market still appreciates that we are moving forward towards a good economy. So it will pick up. I am not going into this debate of securities transaction tax and F&Os. But today, let me tell you, the irony of it is, if you are doing F&O up to 12 lakhs, you will get zero tax. Why? Because F&O is business income, and according to that, the provision that is up to 60,000, no tax. 12 lakhs, no tax. But because you have long-term or short-term gain, taxable at 12.5 or 20%, you will not get rebate. Why this discrimination? And what will happen? There are those provisions, 15H senior citizens ape. Senior citizen, when he gives the 15H and they say now we are bringing separate prescribed authorities for that and all that, how would he know that he will earn not even 1 rupees gain during that year? And if he has given a 15H saying that I have no tax to pay, and there is some capital gain on which he has to pay tax, theoretically he can be prosecuted by the department for making a wrong declaration. Why? Friends, the anomalies like this are literally galore. And if they continue, you will have no solution for resolving the disputes. I want to ask before I end. 7:10 is my time? I'll do it. And then, of course, friends, at the end, after Savanbhai's presentation on economy, we have some 20-25 minutes. If time permits, I think we will have it. We'll have question answers between him and me, whoever can answer. But before I conclude, I want to ask you, with all these provisions, one area where the FM has been totally silent. And what concerns me is the heartburns we get on account of the CPC processing, about which taxpayers are helpless. Why? Because there is no remedy. We are thinking of approaching through a public judiciary forum. Now, this time, I have the last two observations to make, friends. It is a matter of great embarrassment. I don't know whether the Honorable Prime Minister is aware about it or even the Finance Minister is aware about it, but not one, two, three, and four provisions have been retrospectively amended by the finance bill. And what is most shocking, friends, is these provisions. I can understand if they were small things and you had just missed out on that in some small way, but these are provisions which are retrospective from 2007 to, that means 20 years, 2009, 2019, and 2021. And all these four are where Supreme Court or High Courts held in favor of taxpayers. I want to say this because I recall in 2014, when Jetli ji presented his first budget, on the floor of the house he said, we do not believe in retrospect. The only retrospective amendment was the Vodafone case, which was of national importance. Now here, just because, and what they are trying to give an explanation is, after 20 years, after 19 years, after 5 years, we are making these retrospective amendments. Why? Because we are introducing the new act, and under new act we have taken this view. Therefore, we want that the same view should prevail under the old act ever since this introduction of this provision. What an explanation you are giving. I can understand if there was something, but what is going to happen because of this? Just imagine the amount of litigation. And now who will have trust in the finance ministry, in the Central Board of Direct Taxes? You're talking of stability, you're talking of simplicity, you're talking of clarity, and you are making not one but four amendments, retrospective from 20 years, just because Supreme Court or High Courts took a view which was not favorable to you. So if you have not even respect for the judiciary, friends, who will have faith and trust in the administration? And you know what is the current figure of disputes at the first appeal authority level, commissioner appeals? You know what is the number of cases that have piled up? Anybody, any guess? They had to give this number in a public interest litigation some time ago before the Gujarat High Court. And today that number is more than 600,000 appeals are pending before the Commissioner of Income Tax and the First Appellate Authority. And the High Court said, with your current manpower and personnel, you will not be able to dispose this of for years together. Today, the pendency, 5 to 6 years. Appeals of 5 to 6 years are pending. They want to bring assessment and penalty together. The only relief they are talking is, we will not charge interest for the demand, But Finance Minister says, earlier we were recovering 20%. Now we are bringing it down because there is a consolidated order. We will recover 10%. but 10% of a completely bogus assessment order on the top of which you are putting a 200% penalty. Friend, what are you talking about? I am so sorry to say, but this very important key area of dispute resolution, let me tell you, if they have no solution to this, the system will break down. Today in appeal, in the tribunal, there are benches of the tribunal where they have no appeals pending before them. Why? Because appeals are not coming, decided from the lower authorities. So tribunals are left without decision of appeals. More than 600,000 appeals already piled up, and on the top of it, this great provisions of what they call as ease of living. Friends, I think it is time. And if we do not act, if we do not raise our voice in the right manner, at the right moment, the right time, history will be a witness to it that even small mistakes and blunders can cost you for a long time to come. I only pray that better time prevails. And I conclude once again that this is a budget, a reform express, unquestionably for Viksit Bharat. In fact, today, we just decided that let me do the kharkhara part and then he will do the little rosy, thing. Because I have nothing to really cheer, honestly speaking, except raise my voice. But I think I am doing my duty. I have done it. And over to you, Savan Bhai. Though it is February, please be with your Savan Bhado and try to please our audience. Thank you.
Yeah. Thank you. We'll move the slides. Yeah. Thank you, Arin bhai. Thanks for coming. Good evening, ladies and gentlemen. Am I audible? The mic's working. So, of course, listening to Mukesh bhai એક લાવો છે, real લાવો છે, ખરખરો કરતા હોય તોય આટલું હસાવે. And that is the fact that, who knows who is making fun of whom in the parliament, and then who are the, victims to that all 140 crores maybe, though hardly some may be filing the tax returns. So thank you. Yes, Mukesh bhai said there is a reform express in terms of the economic. My role is next 20 minutes to do a little bit about the analysis on the economic survey and the economic situation, a little bit of geopolitical, a bit of where the India stands compared to all other countries in terms of the macroeconomics. And maybe if you want me, I can go into deeper diving to call it a classroom also. So any questions on the technical points also, you may feel free to ask. But the backdrop in India is we are in a situation which is absolutely enviable situation so far as our macroeconomic parameters are concerned. And so enviable that our inflation is in control, forex reserves at all-time high, current account deficit under 1%, we have a primary deficit which is unheard of any emerging markets, including the biggest of the Chinas of the world. And if we look at it, the FDIs are happening, but FDI, I have a very clear, deep analysis that also I want to share today with you guys. And in the backdrop of this, probably this was the time where this reform express could have been a double express that we could have, finance minister could have done, because we had all the reasons to be as bold in the in terms of the budget that we could have done, that we that some things have not been happening according. But very important part, Mukesh bhai, that you mentioned, one is that when the retrospective changes happen, the difficulty is not only about retrospective assessment and then the pain out of it when the things go in past for the assessment pending, but it is about the reputation in the situation when otherwise the world is looking at the largest growing emerging economy in the world. And when this such amendments happen, that is where the investors become little worried. They consider that is there the place that are we going and trading in the right place, right the land where we will not get stuck tomorrow. Fortunately, we can go to the first slide if somebody is moving my slides. I don't know. So fortunately, the situation is such that even by elimination, if we look at globally as an investor, that where do I go and invest, it's about elimination also, that ultimately you will land up with India, because no Brazils or no BRICS or South Africas are doing. China, there is a China plus one, so the investment is not going to China, and the growth rate as GDP as India is something which is certainly everybody is looking at. In spite of the geopolitical issue, we are growing. The IMF, the recent, they are saying we will grow at 7% plus. Now 7% plus is certainly something phenomenal in the world, which otherwise is growing as a world 3%. So we talk about more than 200% as India's growth story, and many more things which has happened, based on which, if we look at today's analysis, that reforms, phenomenal reforms have taken place during the year. The FTA was one more reasons that India has to celebrate. FTA, European EU FTA, and there are some 27 FTAs which are already either done or under negotiation or about to be making it effective. EU is one of them, which will be effective from 2027, but it's a phenomenal message to the world at large, and the world at large, including the Trumps who are trying to call the shots in the world, that there is an that the growth is inevitable for a country like India, because there are two largest of the democratic nations or territories, we can say, that 27 nations in EU, India being a almost 2 crore, 200 crores of people and more, that are coming together for doing trade, with 99% of the products which would be freely rolled out between the two countries. Now this is a huge plus that already that we have. We have insurance and many sectors which have opened up. There is a pain, and I said that FDI, we will talk a little bit deeper into the foreign direct investments that is happening in this country for 26 years now. 2000, May 2000, when the FEMA came into play and FDI was rolled out, current account was totally opened up, current capital account was made convertible over a period of time, released, liberalized, and still under control. There are certain such large sectors which are also opened, which would benefit. New Income Tax Act, yes, old wine, new bottle, some AI driven New Income Tax Act, which I would also say this, nothing, the language also not changes, and that 1500 crores of deduction, remaining 1500 crores was since I was a minor, maybe. Who knows. So that is the reality. But there are many things which the country, the present government is trying. One important and very important thing from a business community point of view that has happened is the GST rationalization. This structure, 5 or 4 rate structures were not working. And certainly that was a big complaint on part from all the global guys, that this is very difficult, because some countries have just one structure and many countries have only two rate structure, which now we have landed up into 5 and 18. And then based on the this also makes it simplify. GST itself has made life easy for us, and there are many more provisions. The FEMA is liberalized and liberalized on a daily basis, or we can see on a monthly we will find some other circular which will liberalize the FEMA. The insolvency bankruptcy code still in the stage of getting established, but it is doing something worthwhile, at least for the global investors, when it comes to that whether I have an exit route tomorrow if I am not comfortable with these countries. And then, of course, there is a RERA, which also has played a big role when it came to real estate. So IBC, RERA, many more things that I have mentioned over there. But SME, certainly very important point. They're going to now create a SME growth fund. And that money in the SME growth fund would be for the SMEs, and that SMEs are, and there are many, even industry expertise, they are talking about, there's several things they have articulated, but it would also be in the physical form of money that will go to the SMEs. You can go to the next this is a simple snapshot. You need to right now just compare the two things, that what was last year, what was this year, where is the money coming from. So more or less the money is the same: corporation tax, income tax, and then GST, excise, and then other capital receipts. So you can see more or less, I'm happy to see they're identical. The GST in percentage term has gone down to 15% from 18%. But that does not mean it has gone down on an absolute terms. That's the GDP which is growing. It's the size of the pie which is growing, which is making GDP, the GST seem to be percentage terms lower number. Otherwise, we are faring well on all fronts and consistent in the tax collections also. Next slide, please. Same thing, where the money goes. Money goes, if you see the two pies, 25, 26 and the budgeted 26, 27, more or less similar pie. Hardly we see any difference, and it is good that there is an increase in defense spending. Maybe 3, 4, 5 years before we were thinking that defense now needs to be slowed down, we should use the money more in development, but we see that the tensions at the borders that keep coming and the geopolitical issues that we are seeing all everywhere, the defense spending also needs to be. So that's the only area where the 10% has become 11%, but otherwise the consistency, this is what I mentioned, that there is a proper rhythm in the budgets that I am seeing, at least in the last 3 years, so far as the allocation is concerned, and so far as actually the revised estimates are also concerned. Sometimes the budgetary estimates and revised estimates, they change quite a bit, but fortunately the government is quite on the control on so far as where the money is going and coming. Next slide, please. This is an important slide, and if you need to understand any technicalities, please feel free to ask me question. But the top line is probably the most important line, which is the fiscal deficit. Fiscal deficit is nothing but the borrowing divided by the total revenue of the total budgetary outlay. Now the borrowing this year is about 17 lakh crore, the budgeted borrowing for 26-27, which is coming down to 4.3% of the GDP. But the important is the scale of the graph, how the graph comes. There's an outlier in 2021 and 1920, 2021 because of the COVID. The global, every country globally, you see this would be more or less the spike that you would see in the COVID times. But the good news is that we are actually seeing the trend which is reversing and coming down. There's a commitment which is given by the finance minister that we'll bring it to 3%. 3% is a tall order, but then we were at below 4 in 2018 and 19 that we can see in this graph so far as the fiscal deficit is concerned. That is to do with debt. When the fiscal deficit increases, the country gets into a debt trap because most of the revenues get into funding the interest and repaying the debt. But we are coming out of that. That is where the last of the right side, if you see the blue or the green line is 0.7%. This is primary deficit, and that primary deficit is non-interest expenditure. So fiscal deficit minus the interest payments on the, so we are at 0.7%, which is absolutely not seen any emerging market, any country. If you go and see this data, this is a place where, that is where I was saying that when the parameters, our forex reserves, our inflation, our NPAs, everything is in control, it was time that we could have spent some more money in the growth of that we should have done. But then if you ask me the same question, that where would you want to spend the money, I would say then certainly development. But that development also, last year the infrastructure spend was 11 lakh crore, this year it has increased to 12 lakh crore. By itself, 11 lakh crores was a huge investment to be made in the capital expenditure. and which is still taken to 12 lakh crores per annum, which was hardly 3 lakh crores only before 10 years. So it is a sizable investment happening on the roads and the rails and the airports and the ecosystem and the corridors that are happening in this country, and which is going to give a push. And then I'll come to that relation to the FDI hopefully in one of the slides. If I don't have that slide, please ask me what is the relation to FDI. And others are the revenue deficit, the revenue income minus revenue expenditure. But fiscal and the primary deficits are so important. This is a very good graph to it. Is certainly music to ears when we see that, oh, my deficit as a country is coming down, and still the outlay is increasing. 54 lakh crores of budget is not a small budget by any stretch of imagination that our 26/7 budget is. Next slide, please. This is an important thing for comparison. Where are we as India? So if we look at it, the US is a 30 trillion economy, China is a 20 trillion economy almost, and India ranks fourth right now at a 4 odd trillion economy. Important to know that these are all in dollar terms. But before coming to dollar terms and impact of the dollar, we must see that the one coffee in Starbucks that we buy in the US and the same coffee we buy in India, how much does the money, if the coffee in US is say $7 and in India it is 300 rupees, that means the $7 is equal to 300 rupees. That is the PPP, purchase price parity. So purchasing power parity is something which is a very important economic indicator of where India is. Looking at that, China certainly stands number one at 41 trillion from the parity. The same McDonald's burger in US versus India, that's how they try to do, and then several other things. So India is a 17 trillion economy from our purchasing power point of view. Compared to, so effectively a $7 is 300, so a dollar for the purpose of this is a 330 or a 40 rupees a dollar in terms of parity. So India has, from the point of view, already been a large economy, but India is also becoming expensive. If we go to industry, industries are complaining continuously that the costs of manpower is rising more than any other costs. And that is where this, how much time this purchase power parity will also sustain and to what extent is also a question. But certainly it's not going to come down to the costs of the advanced economies. Important point to note over here is India is growing almost 7% at a 4 trillion economy. But the most important point is the last column, $2,820. Now, this is we may call India fourth largest economy because it just overtook Japan. And thanks to the dollar depreciation, also India, the rupee depreciated so much, but the yen in Japan depreciated even more. And that could also be the reason to an extent versus our growth versus Japan's growth at 1%, that the economy is putting up at 4.1 or 4.2 trillion. But 2,800 per capita is some 40th, 50th economy in the world. And that is where the pain is, where the people at large are earning $2,800 versus $89,000 as per capita GDP so far as the US is concerned. So it's a long way to go. And then that's Mukesh Bhai mentioned about ease of living in that structure of the finance minister's budgets also. But ease of living, ease of standard of living, ease of doing business, yes, but how would you put money in the pockets of people? 50% of Indians are still in the agri-sector, and 15% of the GDP is contributed by agri-sector. Now, either you focus on the agri-sector, bring in technology, bring in, put as much investments, and make sure that agri-sector becomes a 30%, or you can use that manpower more productively and have that create more GDP for the country. So this is an important slide. India is on the verge of becoming in another 2-3 years the third largest economy also, but that's in terms of size. We are more as much concerned in terms of per capita GDP also. Next slide, please. GST reforms. I'm mindful of my time. Just Mukesh Bhai also banged 7:10. I should close it bang 7:40. So GST reforms, I was saying this two-tier structure, two-rate structure, very important. 5% Important thing to note in this slide is that the continuous increase in collections of GST, which has two aspects to look at. One is the growth of GDP, but the increase is more than there is an element over here where in a parallel economy, in terms of what was not accounted for, is also converting into a official economy that we could interpret from this chart. And that also creates that conversion. That 12% increase in taxation, which Mukesh Bhai mentioned, is also to an extent a conversion. That income probably to an extent was already there, but that income is now coming on board. And that is, so this is good to see. 17 trillion, 17 lakh crores already collected in 9 months. Still 3 months to go for this economy. It will naturally surpass 22 lakh crores of the last year. In spite of rationalization, making GST, leaving out that sin goods rate of 50%, that 40% was 50, today 18 was earlier, there was a rate of 28%. There was a 5, 12, 18, 28, and plus a surcharge of 22, making it 50%. Now the highest rate is 40%. And in spite of that, the collections are in control. Next, please. This is one indicator, and this is an indicator which I wanted to put this as a slide, not a confusing slide if we look at it from the point of view of the trends. If you see, the sovereign yields are growing, and what does the sovereign yield convey? What is the interpretation? Is that demand and supply. If there is supply more than the demand, then naturally the rate has to be higher. If I have to issue shares or debentures, you will say, I will take the debentures only if you give me 12%, 13% interest on the debenture. So yields globally going up, that means there is a demand is less than supply is more. Versus the India is this chart that we are seeing on the right, more or less we are at constant or stable in terms of the, except China. If you see all the advanced economies, the yield rates have gone up. When yield gate rose, there are several things. If we look at it from the economics point of view, that yield rate goes up, that means the discounting factor in a valuation of even equity shares goes down. Because if I am discounting my future cash flows at say 13%, 14%, but my risk-free rates goes up by 2%, that 14 will become 16. And when I discount the cash flow at a 16% present value to come to a present value, naturally the valuations will drop. So there is a angle to the sovereign yields also, which are otherwise sovereign guaranteed bonds, that have the indicator to indicate that where the flight of capital is happening, and then what is going to be the context of the capital markets in terms of even equity markets. So that's the chart. We are happy to see that India is more or less in control. India, we see the rates, repo rates, these are that's what is indicative of his yield. That repo is 5.25%, but it has been more or less, except two cuts, it has been stable for last 4 years. Versus you can, the policy rates globally have been growing, and we see Trump every day saying that no, this Mr. Powell has to go. He has to reduce the rates, but he knows his job probably better. So that is the point of drawing an attention to the sovereign fund. Capex spend, we discussed, it's going to be 12 lakh crores as budgetary allocation and 5 lakh crores as grant in aid, or the subsidies that the government gives or the states that use. 17 lakh crore getting infused in the country for capital expenditure or infrastructure spend is a huge expenditure, which will naturally reap benefits only over a period of time. Next, please. This is one more inflation, just to see inflation again. I will, for the sake of going into a little depth as a classroom, the three types of inflations: headline inflation, core inflation, generally that you see which are being discussed. Headline is a all consumer goods inflation that's impact the country. So India headline inflation is as low as 1.3. Not that that's a normal, but it is in control. And for many years, we see that the inflation has been in the range of 4% plus minus, which is what RBI wants in their advisory also, and thus the interest rates also. The core inflation, which is headline sans without the food and the fuel, is, we can see at 4 point odd percent, 4 point some percent. But that also is because of the gold and silver that has come up in some time, that gold and silver price is rising. 2% is attributed to that gold and silver. But the difficulty is the green line on the left. The green line is volatile. That is the food, CFPI, the Consumer Food Price Index. Now, food price index is still not in control, and government in this budget also has to work on how they do a stability so far as the food production, consumption, supplies, and demand warehousing is done. And that's going to be an ecosystem which a lot of advanced countries have that they can contain and maintain their inflation. And wait a minute, go back. The right side is other countries, world, advanced economies, emerging markets. You can see India in a very good situation of 2.8% versus the world at growing inflation at 4% also. So we are in a sweeter place. China is almost flat in terms of they are trying to push money in the economy, but economy is not reviving so far as consumption is concerned. And you can see the inflation rate in China, which is a concern. Inflation rate dropping to 0% will be concern for us also, because that also showcases a growth at a nominal value. Next, please. This is the central debt. Just to tell you that for an emerging market, a debt of 55% on the GDP, 55% of GDP is considered to be a very good debt. Advanced markets, the debt is much higher because they are much in control of their finances. They have many more security that they have. But India is a 55% with a plan that our finance minister has said that we would like to bring it by 2030-31 closer to 50%, which would be a great achievement for any emerging market across the globe. Next, please. Forex reserve we've discussed. Next, please. But Forex reserve, FDI, stay at NP, FDI, because I know I have 2 minutes to go. FDI, this is a chart, not a complicated chart. There are many lines in the chart, many bars in the chart. But important and very important to know that India, when it got into the story of liberalization, 2000, effective, if I mistake not, it was 3rd May 2000 when the law came into play, FEMA. And then the liberalization process actually started in the true sense. And then so much of FDI has happened. Now, if you see the blue charts, then it is the FDI, this actual gross money which is coming into India as foreign direct investment in a strong capital, which converts into employment, manufacturing, and many more things. Against which, over a period of time, which is 2000s, that FDIs which have come in have started maturing. The companies which invested money in India for years, now they have started reaping benefits, making profits, and that there's a yellow bar which is started growing where they are taking the profits back home. Now there's a money coming in, there's money going out by way of that maturing investments and repatriation of the money that is happening. Effectively, net FDI coming to India has shrunk. $80 billion FDI results into a $30 billion net, because with a $50 billion is going back as it, and that will only increase. That is where I was saying that we'll have to open up the sectors with the foreign exchange reserves that have. Additionally, if we see, there is now last 8-10 years, there is a thrust of Indian companies also doing FDI outside, which we call it ODI, overseas direct investments, like foreign investment in India, overseas. And that also is significant, almost $30 billion this year. And so effectively net FDI, net of repatriation, net of outbound is 1 billion only. So this contributes to the foreign exchange reserve, and that is where this FDI will need some additional push, or we will have to save on renewable is a big thing which is happening. Renewable will be converting to reduction in the capital account deficit. My crude requirement will reduce, my foreign exchange requirement will reduce, and I can afford to not have an FDI to an extent, because then my need for the current account will reduce. Next slide, please. And this is the NPA, just to showcase all-time probably low level, 0.5% of net NPA in the banks. This is a situation which we can, because banking system is very important. It also assesses the health of a country, right? Next, please. And then I think we can go to the last slide. That will be 2 slides further. China plus 1 is working well. There's one more slide. This is a slide that we were discussing. 4 trillion economy will become 5 trillion by 28. We would be the third largest from fourth largest. And there's already a roadmap that is drawn for 10 trillion. And for 10 trillion by 2032 to 35, where we'll stay at number 3 because China and US are much larger already. But that's the pathway where which, and 10 trillion economy is something which is Japan, Germany are not going to become 10 trillion for 20 years because they grow at 1%. And that while India, if it grows at 6-7%, it will by the Viksit Bharat 2047 year, we can certainly reach a 25 trillion, 30 trillion also. And finally, some challenges that I would want to say next one that important is certainly the situations like what Mukesh Bhai said, retrospective amendments. That doesn't, right now, there's no time that India can afford to do such things which can have an impact on the reputation of the country and thus the impact on the investment already in or the new coming in. But certainly huge job create every month 1 million new fellows come into workforce. We are the young economy, which is a plus, but then that needs to be employed also. That India will have to look into food inflation volatility. We discuss rupee getting depreciated directly impacts the bottom line in calculation of your GDP. If 7% India grows in nominal value, 7% is the depreciation of rupee in dollar terms, you are there only. You do not change in terms of dollar terms, though in rupee terms you would have become a bigger country. But that, of course, there is a lot of things, disparities of income, 1% holds 58%. So there are many areas that needs to be worked upon, and sometimes budget is an important tool to work upon such areas, but otherwise then budget also, that's this reform process will have to look into the challenges for actually India becoming a Viksit Bharat by 2047. We can take the questions as it. Yeah, thank you. Thank you, ladies and gentlemen.
Friends, I'll start with some chits that I have already received. You can also feel free to raise your hand and ask any questions. In fact, as I told you earlier, if I had to go through every provision of the finance bill, it would have taken quite some time. So I just took only the priority issues. Now, there is a very interesting question on the amendment in relation to dividend income computation. Friends, it is surprising, but they have done it. And that is, they have now provided, the present provisions under Section 57, as you are aware, allows you, if you have paid interest uh, by way of a deduction, you get up to 20% of the dividend income. Now, from the next year, they have suggested that this would not be there. So that is going to be one amendment that you have to keep in mind. Sawan, this is really surprising. There is a contradiction, in the memorandum, they say tax year 25-26. In the notes on clauses, they say tax year 26-27. Well, these are, but it can only be 26-27. There is no question of tax year. Now, by the way, I am sure you are familiar with this term tax year. You will no longer have any assessment year or a previous year. You will only have tax year. So what is going to happen is, in fact, there are so many provisions in the bill where they are going to be applicable for even the assessment year 26-27. That is good. For example, updated return. That is going to take place with effect from 1st of March 26. Whatever amendments they've introduced to the 1961 Act, they have said 1st March 26. You'll ask me why? Because 31st March, it is going to expire. So it has to be, the opportunity for that to kick in has to be there. So once it comes in, it will stay as long as, the provisions. So 61 Act, if you think it's going to be a bye-bye, right away, no. In fact, all the provisions in relation to the return filing, they have been covered under both, the 1961 Act as well as, because assessment year 26, 27, you are going to get all these benefits of revised return or updated return and whatever it is. But so keep that in mind, and then you'll have the new act. There is one more question, and I had very briefly referred to it, and that is on the buyback of shares. So on buyback, the question is what exactly is the provision? Friends, they have classified this in two parts. And everybody sitting here, it is good news for you because as of now, in buyback, of course, if you are having income below 12 lakhs, you were paying zero tax. You'll ask me why? Because it was being treated as dividend and you could take the benefit of rebate. Now it is going to be taxed as capital gains. And in most of the cases, it would be long term, or in some case, it could be short term. But then in that case, the tax would be 12.5 or 20%, as against, your possible tax rate being at 30% or above if you are in the top bracket. But for promoters, they have provided a dual system. And that dual system for the promoter is that there will be capital gains tax and there will be additional tax they will have to pay. So ultimately, they want promoters to pay up to 30%.